Vanguard's 2019 10-year market forecast. The synopsis right here, my friends. We're going to talk about that. So don't forget to subscribe if you like this kind of stuff here at the Heritage Wealth Planning YouTube channel. Now, I just did 3 or even 4 videos where I dived into these in detail. So if you want to get the total of their 44-page 2019 report, by all means, go back and I'll put links in the show notes and whatnot. This will just be a quick and easy on their synopsis about their 2019 10-year forward-looking projections as we go forward. Now, is this something that will come to fruition? No, it won't be. Why? Because we don't know. I can guarantee you right now, the numbers that we see here will not show up exactly as they say. And Vanguard will say the exact same thing. Jeremy Siegel of Morton, Robert Schiller from Yale, John Bogle from Vanguard. Everybody's going to say this is our projection, but we don't know. And you don't know either. However, the reason I want to do this quick and easy one, because it gives you numbers that you should use when you do your financial planning. All right. And that's what I'm going to use as I do financial planning. So let's dive right into this again. And don't forget to subscribe. And of course, thumbs up always help. All right. So here we got the projected nominal returns, 10-year annualized nominal returns. All right. Of their 2000 as of 2008, September 2018. All right. So they're saying a 60-40 stock bond portfolio right here, global, now not just U.S., so 60-40, you got 60% stocks, 40% bonds. They're saying 50% of the time they project a 4.9% or lower return. 50% of the time they project a 4.9% or higher return, all right, on a 60-40 stock bond mix. 100% bonds, 50% of the time they're saying 3.4% or lower, and 50% of the time they're saying 3.4% or higher. 100% equity is 5.3. All right, so basically what we're using here is we're saying the median that Vanguard's assuming for a 100% bond portfolio globally now is 3.4%, and that is before inflation. Before inflation. Scary, all right? A 60-40 stock bond portfolio, they're saying, is going to give us 4.9% before inflation, not just for 2019, but for the next 10 years to come. 100% equity will give us 5.3 is what they're saying before inflation. Now they're saying if we're lucky and we get the 95th percentile, again, that just means 5% of the time they'll get 9.7%, or 8.4% or more. That's not good, my friend. So if I'm doing planning and you're doing planning and you're heavy into bonds, you should be 4%. If you're 100% in bonds, you should be 3.4. If you're 100% stocks, you should be 5.3. If you're 100 heavy into stocks, you should be 5.2. This is the numbers you should use right there, the median. I'm telling you, if you're doing planning and you're using something else, you'd have to justify why. Why are you using more than 3.4% on bonds and 5.3% on stocks? Why? So Vanguard, just to wrap up, is saying, remember, they're expecting U.S. stocks to give us 4 to 6% rates of return over the next 10 years. And that's going to be 5. International stocks to give us 6 to 8% rates of return over the next 10 years. That's going to be 7. All right. So if you have a foreign stock and a domestic stock, you're looking at 5 plus 7 divided by 2. That's a 6% rate of return on stocks over the next 10 years. Bonds, pretty simple. What's the 10-year treasury doing? And they're expecting about 3.5. You throw in some 3%, throw in some international bonds in there, and you're getting a 3.4%. I'd say that's even probably on the high end. That doesn't give you a whole lot of room to maneuver for sure. Now, if you tilt this in any direction, they'll show down here. If you go 60-40 with no U.S. stocks, they're expecting it only 4% is a median. So they're saying stocks, just diversification, no other way around that. If you go to emerging markets, you're putting 20% more of your equities to emerging markets. They expect you can squeak out 5.1 as opposed to 4.9. So none of that matters. What matters is fees and taxes. I mean, just because this is before fees, taxes, and inflation, which is just downright scary. All right, but there you have it. That's the Vanguard projected 10-year annualized nominal. Remember, nominal is before inflation returns. And number one thing you do is pay off your debt. Number two thing you do is reduce your fees. Number three thing you can do is reduce your taxes. So I hope you find this helpful. Again, if you want to see the whole thing in its glory, look, I'll put the links to the other videos I just did. So don't forget to subscribe, and we'll see you next time. Thanks, guys.